wage. Look, we were expecting a weak number. A lot of you predicted weaker than the estimate of 180,000, but not this week. Stephanie Pomboy, you were spot on.
Well, there were two major contributors to the increase in January, which were construction and retail, and we saw both of those reverse, not surprisingly, in this number with construction down and I guess retail employment fairly flat. Retail has been interesting because we've seen a huge increase in layoff announcements, but we hadn't yet seen that translating into the actual employment numbers. So I think maybe we're starting to see that divergence close. But generally, I don't think this is really surprising. I honestly would do a 3-month average of the last 3 months, and you come out with somewhere around 180,000, which frankly isn't that much far off from the average that we had seen throughout 2018.
Now, the January numbers were revised upward, Dagan, but 311,000 versus what it was, not that big of a difference. Your reaction here?
If you look at the wage gains, though, because wages are rising at 3.4% from a year earlier, that is faster than expected and also the fastest pace that we've seen since April of 2009. So almost 10 years it's taken this long to get to wage growth like this. This is hugely positive. And you have to question with this just 20,000 job number for the jobs created. That was even well below the lowest expectations from economists. Maybe we could expect an upward revision next month, the following month first. But also this does speak to the difficulty that employers are having filling jobs that are open, because you see that broad gap between the record number of job openings and the people who are unemployed in this country. In the most recent surveys, it's more than 1 million people. So that might speak to some of the actual job creation.
Michael Block?
I'm at the point where I don't really look at this non-farm payrolls number as the big focus. Dagan mentioned it, though. I'm going to talk about it. My big focus here is that average hourly earnings number, up 3.4%. As Dagan pointed out, the biggest year-over-year increase in almost 10 years for a month. What I'll say about that is this. It's good to see wages are going higher, but we're talking here about first quarter earnings comparisons. What is this going to mean for corporate profits and corporate margins? That's what I'm worried about here, and I dare say that's what the futures are telling us right now.
Well, this is what Stephanie's been talking about in terms of earnings and the weak earnings story, Charles.
Well, wages up now 4 months in a row over 3%. I don't know what the percentage was for non-supervisory workers, but it was up 6 months in a row. In fact, in 4 of the last 4 months, non-supervisory wages grew faster than the total. So for me, what I really like about this number is the wage number and the fact that the Fed has indicated that they won't stop this, that they'll finally let middle America get a raise, and a sustained raise. And I think I agree with Michael. To me, the two things I was most concerned about was the wages and participation. I wanted to see a little bit more participation, but remember, 63.2 is still the highest since September of 2013. So we want people coming into the labor force and getting paid. Those are your underpinnings for any economy.
How much of this is a follow-through from that government shutdown, John Hilsenrath? Because the report showed that jobs were lost in construction, mining, and retail last month. I'm just wondering if some of those jobs were to be planned in January and you didn't have any of that because you had a 35-day shutdown. Was that part of this in February, follow through from that January shutdown?
Well, I mean, I think the data have all been really noisy because of the shutdown, so that might have played a role into it. I think a bigger factor was just the seasonality of the numbers, as we said, payback in construction and retail. You know, I think that what this number tells us is a couple of things. One is the Fed has hit the pause button on interest rate increases, but possibly the stop button. We might not see another rate increase this year, and this kind of plays into that. The other thing I'd say is that we are getting a slowdown in the economy right now, but let's not overreact. An unemployment rate of 3.8 is really good. We've had 101 straight months of job creation.
Yeah.
They've averaged 190,000 jobs a month over the last 3 months. So this is a slowdown. It's not the end of the world, and the Fed has noticed it, and it's responding.
Yeah, and Stephanie, you were asking about the participation. The participation rate at 63.2%, but participation apparently has fallen since the early 2000s as the wave of women entering the labor force slowed and baby boomers began to retire. This is from Dow Jones.
Actually, what I really want to know is what was the labor force, because the unemployment rate ticking down, you know, can happen by way of two things.
Right.
Either employment goes up or the labor force shrinks. So in the last month, in January, we actually saw a decline in the labor force. So I'm curious as to what happened there. On the labor force participation, you know, it's disappointing, as Charles said, that we're kind of stuck at this level. We'd like to actually see that number tick up. But you know, I guess maybe that also addresses the skills gap, too.
Yeah, well, that's definitely something that is an issue. Jack, we talked earlier when you were here on set about black unemployment. Give us some of those stats that you mentioned that you were pretty impressed with, even though we're seeing a lot of loss in jobs in the month of February here.
Yeah, I mean, right now it's historic. I mean, 65% of working black women are working white-collar jobs compared to 42% of black men. I mean, this is International Women's Day, so I think that's a pretty powerful stat. But, you know, I'll also make another point that we have to keep in mind. Working visas in this country are at a backlog. I've talked to a couple of close friends and business owners who can't get working visas, and they can't find people to fill these positions. And so, I mean, I think that's also reflected in these numbers somewhat. But if you look right now, I mean, there's a lot of companies that need people to work, and they just aren't allowed to bring them into the country.
Yeah. I think the best part of this report is the wages of 0.4%. This is a very good number on wages, Michael.
Again, you know, this is a margins issue, but just thinking about what Jack just said and thinking about the size of the labor force and some other factors here. The latest Beige Book was out on Wednesday, and yes, Dagan, here I go with the Beige Book.
Well, I'm sitting over here reading about productivity growth, so have at it.
I'll have at it.
I can out-nerd you any day.
Challenge. No, you can. You're a wonderful nerd, Negan.
Continue. No, go ahead.
Anyway, what I can say is this. You know, there were noted shortages around the country in every district, not just in tech jobs and construction jobs and trucking jobs, but in things like retail and things like restaurants. The labor force, there's a lot of disconnects here, and you know, the economists will say, you know, they model it out that there's perfect movement and mobility. There's not, and we're starting to see some effects of that, and there's some disconnect here as you know, as the model builds itself, so to speak.
I will say, though, with the wages, the only negative for this, and we saw it in the ADP number yesterday with the category 1 to 19 employees, had a decline in workers. They cannot keep up. Costco last night raised their minimum wage again for the second time in 6 months. And it's the only problem now is because we've had such, and by the way, NFIB, they said for the first time, all-time high, the labor, right, the labor costs and finding quality workers. So you're right, the labor shortage is helping to drive up these wages along with the jobs.